when we look at China, there's very different risk bucket. I mean, to your question regarding to risk premium, someone asked me the other days on, when is the time to basically bottom up buying China. If you look at some of the investment grade, right, for example, in single A space, literally the spread right now is about 80 over Treasury. Just to give a bit of a context, in Jackie, single A is about 130, so if you exclude China, it's probably about 140, 150. Even right now, it's actually tighter than US. And looking at what happened in the past few days when there was a little bit of volatility on the spread, actually China single A been doing really, really well. That was because of supply, that was because of technical. So in certain part of the bucket, the risk premium is actually very low. But we believe they will continue to stay low because of the very strong technical, but also they are very large SOE banks, energy companies, and a few of those technology companies that are doing really, really well. If you go down into the bucket, for example, into triple B, it's all over the places. Let's forget all these China property that are yielding whatever 10, 15, in some cases 20% yield. But otherwise, you get a lot of those, if 200, 400, 500 credit spread. I think those sometimes can be quite interesting. Then you got a bucket of LGFV. So from Fullerton point of view, from a research framework, some of those we may find it quite different from how we actually approach credit. So we've been sort of stay away from most of the LGFV. And then we have China property that I guess we probably don't want to talk about it, which is essentially a special situation, credit situation right now. And lastly, on the on the industrial and some of those high yield credit. If I could just spend 1 minute on those, is that comparing to in the past, let's say when the event come through, right? Usually a news, then what will happen is, okay, the analyst will set up a call, talking to the company, and then maybe have an investment committee meeting and decide what to do. And sometimes it takes a few days before the market really has a move. But nowadays, if I try to create a terminology, right, the credit market is trading a little bit like a equitization. So it'd be like small cap, when the news come, because the risk premiums is so high and market is so fragile, then the bond will just collapse and down 20, 30 points. So from a research framework point of view, what we really try to do is to day in, day out, looking at all this distribution of outcome and see potentially where the opportunities are. The traditional way of looking at RV may not really apply, but at the same time, those are where most of the opportunity there. So most of the other opportunity, I mean, we sort of talk about it. Then maybe the only other point I would like to add, or 2 points. One is, increasingly we also gone to a part of the cycle when there's a lot of event-driven opportunities, and they may not be special seed, may not be distressed, but include, for example, there's a lot of those bond buyback in the market. And some of the AMC been pretty open about how they're actually going to do it, and occasionally we're also seeing some of the high yield are doing that as well. So that creates some opportunities. And lastly, for those international investors want to participate in China, then certainly Macau gaming, if I'm relating in that way, is still some opportunity, right? They are quite large in size. They have a good correlation to China beta. On average, issue size is about $800 million, liquid enough. We've got a very clear guidance regarding to regulatory framework right now, unlike a few years ago when there were more uncertainty. And then also at the same time, CapEx is quite clear, refiling cycle is quite clear, and look at GGL, in the mass market, they already exceed what they had been in before the COVID. So those are areas that we focus on, but however, the bucket of what we can invest are certainly less than it used to be.